Hey YouTube, it's Christian, and I'm back this week to talk about where to place your money in 2022. What investments should you be looking at? Now, it won't become a surprise to you that on Multifamily Strategy, we're going to talk about multifamily. However, there's other places you can place your money, and we want to talk about what people are doing, why we are doing exactly what Cody and I are doing. So, places you can put your money. This isn't all encompassing, but you can do it in a bank. You can keep your dollars as dollars. You can do it as stocks, trade paper for paper in companies, hoping for greater appreciation or some dividends. You can place it in real estate, office, industrial, self-storage, multifamily, lots of asset classes within that category. You can also look at cryptos, both the cryptocurrencies and NFTs. A lot of other places to invest money, including gold, silver, coins, whatever you want to place it in. However, we're just going to talk about a few of them and what you should be looking at going into this year. So, first of all, dollars. We've printed a lot of money over the last few years, a ton of money the last few years, which has caused inflation. The dollar is worth less today than it was last month and the month before and the month before and the year before that and the year before that. Now, normally inflation likes to hover somewhere around 2%. That's what we consider healthy. However, right now, the government's saying it's closer to 7%. I'm saying it's double digits. So if you put your money in a bank, it is going to lose value. I do not consider that an investment. That is more of a liability than anything. Placing an investment somewhere where you know it will be worth less. Have to disagree with Dave Ramsey on this one. In today's economy, saving is for losers. Now let's talk about stocks. Stocks, we have seen go up and down and up and down. We have a lot of increased volatility after a long period of stability in the stock market. As of today, stocks are significantly down from where they were at a few months ago, being led by companies like Facebook and huge drops in the tech sector. What we try to steer clear of, and why I'm not placing money in stocks, in fact, I've sold all of my stock off at this time, is because you're just trading paper for paper. You have dollars, you're trading them for stocks in a company, hoping that they do better. Now, you may have some dividends in there. I would not invest in a company that does not have it because I like to be paid while I wait for my money to grow. However, stocks are primarily an appreciation game. Right now in high volatility, I wouldn't place all my life savings trading paper for paper. One note for another is not the investment that I'm trying to make, though I do believe you'll be better off than placing your money in a bank where you're guaranteed to lose. Now, gold, silver, I'll go into briefly. Kiyosaki's really been pushing these. They're a great way to hold money. Again, it's a hedge against the deflating dollar. I don't have a material problem with it. I have a little bit of silver. I have little collectible silver coins. That is more of a hobby than it is an investment. They tend to go up with the inflation of the dollar. They're good to have. You're never going to get rich off buying gold and silver. They're fairly stable. You don't see a whole lot of major upticks and downticks over time. If you're trying to grow your money or retire, they don't pay you to hold. So I don't love it, and it's not what I recommend. Crypto and NFTs. Crypto is still very, very young. I know it seems like it's been around for a while now. It is very young. If you're investing in the actual currency, we don't know which ones in the long term are going to be the winners and the losers. We just don't yet. We don't have enough regulation or direction from the government to know how crypto trading in the long term is going to work and how integration is going to go, as well as which coins are going to take off. If you're doing this, there's a lot of volatility, which means there's a lot of opportunity. We do like this. However, because there's so much volatility and because you have a very reasonable chance of losing a lot of money as well as making a lot, not where you should put the majority of your cash. Not at this time. If you're investing in crypto, you are welcome to do it as your fund money. I currently hold no crypto. However, if you enjoy that, volatility is a lot more engaging. It's a lot more, it was a lot more exciting at least. If you're going up and down in cryptos, I would limit your spending there to money that you can absolutely afford to lose. Depending on your financial situation, that may be 5-10% of your portfolio at most, if at all. Then we get into real estate. I'm going to deep dive these very, very quickly. You have office. Office has typically been very stable. I know a lot of people who've done very well in office. I also know people who have, at the beginning of COVID, not one, but 2 buildings get 100% vacant and have had trouble leasing that space back up. I do not believe we're far enough through the pandemic and recovery to know exactly how office is going to recover in the long term. We've seen a lot of success from a lot of companies in work from home. I don't think we have enough solid evidence of what the demand is going to be coming back into office space. Whether people are going to migrate and stay home, do a blend of the two. We just need more time before I place capital heavily into market. Industrial, seeing its day in the sun as it has been the last few years. Amazon has done very, very, very well through the pandemic. People are ordering from home, eating from home, shopping from home. It is all happening online. They're moving warehouses to be closer to locations for next day distribution. So all the distribution centers have done just absolutely phenomenally. That said, it's very, very competitive. It's hard to find a great deal. Developers are trying to scoop up any land they can, and a lot of those are getting pre-sold to large companies. If you can find an industrial deal, and that's something that you're passionate about, it's a very hot market, and if it cash flows, by all means, go for it. Self-storage is another one. People have a lot of stuff. We've accumulated a lot, especially in COVID. We just have picked up a lot of junk. Self-storage typically does very well, is relatively hands-off, which makes it an investment that both Cody and I are actually interested in. As of today, I don't own any self-storage, but many people in our immediate network and friends do and have done very, very well. It is something that I would look at your portfolio. And lastly, multifamily. The reason we love real estate is it's a physical asset. I am trading my dollars for something real that I can touch. This isn't an NFT. This isn't a fake token. It's not a monkey smoking a cigar that's going to sell for $5 million. It's an asset. I can go out and touch it. Second, the cash flow. Like anything in real estate, you have cash flow. It's run as a business. We live off of cash flow. In a down economy, as long as that cash flow can still continue to service my debt, I can get paid while I wait for the economy to shift again. This is not something that you can do in every asset class. That's why we love real estate. The reason we love multifamily is in a down economy or an up economy, we still need somewhere to live. Whether you're rich, you're poor, you're somewhere in the middle, you need to have a roof over your head. Now, places where you might get pinched in a down market, if you have Class A real estate, very, very, very nice multifamily properties, in a down economy, we will actually see people leave those for less expensive places. However, anything else, Class C, C+, B, B+, you name it, very, very stable. Make sure you have enough cash flow where you can pull rents back at least 20% and still be cash flowing. There's a metric that we use back in 1920. We saw the markets pull back almost 19%. That is the largest rental pullback nationally we've seen to date. Make sure you can survive the worst. And if you can survive the worst, you can get paid while you wait. That's why we're looking at multifamily. We're going to expand heavily through this year in more multifamily assets. If you want to learn more on how to do that, please follow us here and on any of our social media. Hope this was helpful in how you're going to place capital. This is what Cody and I are doing. I don't recommend throwing all your money into one place unless it's multifamily and it's paying you to get there. Hope this was helpful. Like, subscribe, follow us for more.